Hello, this is Rich Morrison, and welcome to my latest edition of the Thinking Cap, where today we're going to talk about what's up with corn. A lot of things happening in the corn market lately. It's been a little quiet this week, but is it a calm before the storm? We've got some things brewing. I some things I was thinking about in my mind this morning. I thought, you know what? We're just going to record it. We'll put it all out there. You can read it and decide what you think as far as what can happen in the corn market. It's been a pretty active winter as far as farmer selling. We know that a lot of corn has moved over the last couple of months or so. It's gotten a little quiet over the last few weeks with the market down, but certainly that rally was very welcomed by a lot of folks and they took advantage of it. So, again, what I do with NEU Country is try to tie the grain marketing piece with crop insurance and government programs and help producers put together a plan and help you work out that plan throughout the year. And certainly things change, and we want to address that throughout the year. So even though NAU Country is a crop insurance company, we still focus on a lot of other things throughout the year. So what's going on today? And part of the reason I wanted to do this video is because of what the markets are doing right now. And as I record this, it is Thursday morning, a little before noon. We've got May corn up 4 3/4 cents. July's up 4 1/4. The new crop months not so much, and you can see the prices over here on the right hand side. And so we're seeing the spreads, the bull spreads, if you want to call them. That's the technical name. Bull spread means the near term futures is gaining on the deferred. And so what's going on? Why is this happening? What could happen as we go forward? And what's it potentially mean to you as a producer? Well, if we look at the current balance sheet situation for old crop corn, where we're at today, USDA is projecting ending stocks at the end of the summer at 1.54 billion bushels. Everything on the supply side, for the most part, is pretty well locked in. The yield, the acres, production number, all those were final back in January. Theoretically, you could still see USDA tweak a stock number from last year. You could see them tweak imports a little bit, but the supply side is pretty well locked in. What we're still waiting to see, of course, throughout the rest of the year is how much we use. Will the feed number change much? Will ethanol, it's pretty well maxed out right now. I don't think it can probably change a whole lot. The export number is the one we're all talking about and probably can change. And so we'll look at that here in a minute. But that number could end up being a little bit higher. So total demand, somewhere over 15.1 billion bushels. USDA says we're going to end the year with 1.54 billion. More than likely, that number is going to come down. We'll talk about why here in the next couple of pages. USDA was estimating average farm price at 435. That number has come up the last 2 months, probably will come up a little bit more as we go forward. So, what's going on right now? Well, this morning we had our weekly export sales numbers out. That's not included in this chart from Brock Report, but they were showing here a week ago how our sales so far year to date continue to run way above the 5 year average, way above last year. And we're on pace to easily get to USDA's target number, that 2.45 billion bushels. I think everybody that knows anything about the market thinks USDA is going to raise that number. One guy this morning that I read on X basically was calling out USDA for being negligent or whatever you want to say as far as not increasing that number prior to where they're at today. So that's the situation. When you look at who's been buying corn, surprisingly, China has still not bought any U.S. corn. But all the normal buyers, Mexico, Japan, South Korea, Colombia, they've all been buying more than normal. And there had been some thought early on that maybe these purchases were front loaded because of the election and maybe because of fear of President Trump putting tariffs on. Well, the election's been over for a couple of months, and you're still seeing sales at strong numbers. This morning, we were over 1.6 million tons once again, way above the pace needed to reach that USDA target for the year. And so the other side of this is shipments. And yes, we're selling it, but are we shipping it? The answer is yes. Our shipments, even though they were down a little last week, we're still running at the top end of where we've been over the last 5 or 6 years. So everything on the demand side of the equation right now has been strong for corn, and it's been very supportive to the old crop. And finally, if you look at this great chart from MD Commodities, the United States is holding a bigger share again of world exports. For a few years here, we had Brazil jump in. Now, what's changed in Brazil is they have really ramped up ethanol. Read a story this week that Brazil is pushing E30 blends now in its ethanol. We can't even get to E15, but Brazil's pushing to E30. They're going to continue to use a lot more of their corn domestically. And so, from a couple years back when China was buying corn, Brazil stepped in along with the United States. We don't have that Brazilian competition anymore. And so, everything is kind of, the stars have really aligned this year for U.S. corn. Now, that doesn't mean we should be trading $6 corn. We've got enough, but we've just drawn down stocks quicker than what we had thought we were going to get it done. And so that's been a big positive. And if you look at how things have changed, since Thanksgiving, now, last year we made our high early in the year. We got inundated with old crop corn that hammered the market late summer, probably pushed the market down too far. Really, we had a harvest before the harvest last year. But now, here, even at Thanksgiving time, demand, all the USDA numbers we were looking at that time continued to tell us we were going to have a 2 billion bushel carryover. Now, you can get into the conspiracy theory thing and everything. We just had the JFK files released this week. Are we going to have the USDA files released? Just kidding. But USDA is always slow to make changes to their numbers. They were slow to maybe accept that those export demand numbers were going to continue out into the spring. And I get that. They thought, well, maybe these are just front loaded and maybe things will slow down and you get into the back half of the marketing year. That's not happening right now. So USDA probably should have raised their export number in March in the report. They didn't do it. I think everybody and their brother and sister think they'll probably do it here in April. And so we had this massive rally that was really triggered by a few things. The crude oil market had a big rally in December. We had the USDA report in January, which gave us a big boost right here on the 12th. We had the market continue to push higher and good export sales. Then we just really fell apart. Part of that was tariff talk here in February. Certainly, that was a big factor. Part of it then became talking about bigger acres this coming year. That we'll talk about that here in a minute. And we saw big farmer selling leading into this rally. And you saw the funds build their big long position to match the biggest they've ever had. And it all just tipped over. It's kind of like that thing at the water park, that huge bucket that, continues to have water pumped into it. After a while, it just tips over. And that's what we saw. Now markets are starting to come back a little bit, and especially led by the nearby May contract, as we saw here this morning. So, do we have some more upside in this market? Very possible. A lot of it's going to depend what the funds decide to do with the rest of their position. You can see that they had liquidated. They had gone from 360,000 contracts long in early February, and now they're down below 150,000 long as of Friday's report. So will they continue to sell? Do the funds want to get on the buy side again? A lot of what happens in our market is really going to be driven by this investment money. One of the big factors lately, in addition to tariffs, quite frankly, has just been, a lot of nervousness about the economy. You've seen a lot of money flow into the gold market, a lot of money get out of other commodities, a lot of money coming out of the stock market. So we've had a flight to safety. Will that let up here? I think this morning's export sales report probably is something that maybe would trigger some buying back into the corn market. So the flip side of the old crop situation is the new crop situation. And when you look at the numbers on the balance sheet for this coming year, the Ag Outlook Forum came out a couple of weeks ago at 94 million acres. Most private analysts that have come out so far, Pro Farmer, Allendale, S&B Global, they've all come out 94 plus, give or take, on crop. I'm using still 94.6 million acres. That's where we were just a year ago. So if you flow through a balance sheet with a trend type yield, you're looking at stocks over 17 billion. It depends what you plug in for the demand numbers. I think ethanol is going to continue to run hard. I think export demand should be strong through next year with a lack of competition from Brazil, Argentina, Ukraine. Demand over 15 billion. You're looking at potentially pushing stocks back up to 2 billion bushels plus. And so that's what the trade is thinking right now. And so you've got this situation that's built in corn where you have two completely different crops. This old crop situation is tightening. The new crop situation is going to loosen things up in several months ahead. Now, all that depends on weather. I didn't want to get into weather here today because we don't know what's going to happen. But if you just assume a normal yield, we're going to see a big increase in stocks in the year ahead. And so December corn has not really been able to muster a whole lot of a rally. It did follow the May corn higher here this spring. Was quick to retreat when the market started lower, and we have bounced back. We've gotten back to 450 corn. I've been very well documented as saying that, ECO made a lot of sense here with that 470 price. 95% of that's 446 and a half. We're just barely above that as we speak. So producers that bought ECO probably feel pretty good as using that as a put option right now. We would certainly love to see some additional rally in D's corn to be able to sell. I don't know when and if that's going to happen. A lot of it's probably going to depend on weather, acreage numbers, etc. So this is where I wanted to get to, was this spread between May and December corn. And again, we've got two completely different crops here. And if you go back to last fall, you had the market in a carry. We had at that point in time, again, we were talking a 2 billion bushel carryover, had a big harvest, things, we were swimming in corn. The market was paying you money to store corn, not a lot, but a dime from May to December. Then, when we started seeing the sales running at full speed, you had the USDA drop the production number, and all of a sudden that market inverted. We had May trade to a 40-cent inverse over December corn. Then, when the market sold off, you saw the funds sell, they sold the May, and that was where most of their ownership was, and that drove this spread back towards zero. Here today, following the positive export sales numbers out this morning, you're seeing that spread back out to 14. So where can it go from here? Good question. I think you could go back to that 40 cents again. I don't think that's a reach at this point. Now, two things can happen, or three things can happen to make that spread go to 40. Number one is to see a rally in May. Number two is to see a decline in December corn. And number three would be a combination of the two. At this point, I would tend to think it leans towards more positive to the May futures rallying. Now, what's history in this spread? Well, go back to 2022, and I found this on the internet. And the reason I looked at 2022 was the last time we had a carryout pretty similar to where I think we're going to be this year, when our carryout back then was between 1.3 and 1.4 billion. And so we've got the futures markets here in blue and light blue and dark blue, but the spread in gray shows that we had reached a peak of $1.40 inverse at the beginning of March that year. Markets rallied sharply when USDA reduced the old crop stock number quickly. And so little different than this year where things have been kind of elongated. We saw this huge spike in the spread, then things backed off, and by April, we were right back down to about 50 cents. And then we just kind of meandered all the way through the summer. We saw that spread actually increase to 70 cents before finally tailing off into expiration of the May contract. Excuse me, that was into May before the May contract expired. So where can you trade? Certainly this 40, 50, 60 cent level can happen. What does that mean? Well, if you had December corn at 450, can you take May corn to $5? Maybe. I think a lot's going to ride on this April supply demand report. Do I want to be a seller of old crop corn today? Probably not. If I look at the RSI stochastics, we're kind of middle of the road right now. So I think I'd take it easy at the moment. I don't see a lot that would hurt us. The obvious thing that could hurt the market would be some big tariff news. If we decide to slap a 50% export tariff on Mexico tomorrow or April 2nd, for example, that's the next big date that we're talking about tariffs. Beyond that, on old crop corn, I don't see competition that's all of a sudden going to come up with some corn to sell. So I don't think that's the case. If indeed these buyers are front loaded and all of a sudden they just decide to quit buying, Certainly that could be a situation. The other obvious is the funds. If the funds decide it's time to get out, and sell and get back to zero, then maybe you see some pressure on the nearby contract. But I tend to be a little bit positive, I think, towards that nearby contract. I think we've got an opportunity maybe to go back to that 480 level. If I've got old crop corn left, probably eyeballing that as a good target to start making some sales. And then if you look at the history of the spread, the corn, just look at the corn, I guess. But, you see the spread in corn, the difference, old crop to new crop, it tends to start to fade as you get into the summer months because we start to be able to ration any old crop corn. If you're an end user, you may say, we'll shut the plant down, the ethanol plant down for 2 weeks to get ready for harvest, et cetera. So, you start to see less volatility in that spread as you get later into the year. That said, we've had it happen. And I remember one very well, 1996, where the old crop, new crop spread went to a buck 50 at one point. And we had, you learned a lesson that year, but there were people that were telling when the old crop July got to $1 over December, people were suggesting we should hedge new crop corn in the July contract. That spread ended up going to $1.50. And so, if you thought you were going to outsmart it, it went the other direction. You ended up losing money on it. And so you ended up, by the time you rolled to December at $1.50 inverse, it got really, really painful for a lot of people. So as we think about, these are my observations on the old crop, new crop spread, the fundamentals favor higher old crop corn price. They probably favor lower new crop price than 450. If we're thinking stocks over 2 billion, I don't see that we're at 450 this fall. If that does happen, you're probably trading down in the low fours, if not below $4. So, as we sit today, old crop corn could go to 480, new crop could go to 390 at some point. Could, if everything plays out. Managed funds still holding longs in corn. All of their longs are in the old crop. So, if they decide to sell, that's where they're going to sell. If they decide to buy, that's likely going to be where they're going to buy. Don't get caught using phrases like must or has to or won't or never will. Those don't usually work out very well for traders. If you get that hard head that this has to happen, that oftentimes doesn't happen. And so just beware of that. Hedge. That's what a hedge is. A hedge is, you're locking something in, you're taking risk off the table. Don't get caught in the has to. Utilize options if that helps you be able to do that. Always keep your hedges in the correct crop year. Again, I learned that back in 1996. You don't want to be hedging 26 crop in the 25 futures market. You can take a pretty hard hit. And again, that's not a hedge. And so keep your hedges where they need to be. So with that, I hope that was at least informational. Hope you gleaned something from that. I thank you for listening to the latest Thinking Cap. Take care. Have a good spring. We'll talk to you again very soon.